Nigerian bond market remains a veritable source of long-term funding for both the federal and state governments, particularly in the areas of infrastructure development. However, corporate debt issuance remains weak, with total number of bonds issued in the Nigerian private sector currently at just 1.3 trillion naira. Well, earlier today, I reviewed the opportunities in Nigeria's bond market with Martin Grandes, he's Director of Research at the International School of Management.
I think Nigeria has a very promising future ahead, which is on the basis of the current economic situation in Nigeria, which is pretty good, pretty robust. Nigeria has been growing for 4 years at the 7 to 8% GDP and has been able to manage its fiscal accounts and has been running a current account surplus, and also has been able to manage inflation, although it's a little bit higher than the average emerging market inflation. And moreover, and probably more important, it's on its way to improve its institutional framework. That is political stability, the increasing enforcement of the rule of law, the progress you are trying to make to improve the institutional framework, I think will be necessary to keep pushing forward the corporate bond development agenda, and moreover, or I would say more importantly, to be able to have more companies coming into the bond market to raise funding for their financial needs, for the infrastructural investment, or for simply rolling over of the financing. But my opinion is that you have a positive outlook, thanks to partly to what the government has been doing, and thanks to recent issuances of Eurobonds by financial firms notably. I think the prospects are good. The improved rating of the country, it's a good symptom. And so I see that the preconditions to develop a corporate bond market locally first are pretty much met, but yet the corporate bond market is very small. So your question would be, why does the corporate bond market not develop? Well, I think it takes long.
Okay, let's talk about the Central Bank of Nigeria. We do know that the activities of the Central Bank is quite pivotal, especially its policies, to the development of the bond market, particularly in the repo area, demand and supply equilibrium and all of that. What would you like, or what role would you like to see the CBN play, or what do you think the CBN should be doing in terms of perhaps extra efforts to help support the corporate bond market?
Well, I think that the central bank can play a key role by continuing to bring down its interest rate, monetary policy interest rate, and by the interest rate channel and the credit channel transmitting this into a lower long-term cost of funding. That would be great if they can continue to do that, alongside bringing inflation down. With the 10% inflation, it's pretty high for the typical emerging economy, or by emerging market standards. I would say that I would feel more comfortable with a 5 to 6% inflation a year. Right now, the central bank is making a lot of effort in order to achieve a lower interest rate and lower inflation, but also by introducing market-friendly regulations and by supervising this emergence of corporations that want to tap the market, by making it easier to issue a bond, which is not straightforward today. They would do it. But I think it's also the Nigerian Stock Exchange that has to play a role together with the central bank. The central bank takes care of basically of the short run equilibrium, right? Macroeconomy in the short run. I think there are other actors that have to continue to make efforts, right, to produce a more developed corporate bond market, and also try to take into account this trade-off between running fiscal deficits financed through the local bond market in local currency and crowding out funding, right, from the private corporate bond market. But I would say that it's not only a matter of the central bank. There are many other actors in the economy and in the financial industry that have to promote the development of the corporate bond market.
Okay. We know South Africa has a very big bond market.
Yes.
With the pace at which the Nigerian corporate bond market is growing, still slow, but 5 years, 10 years down the line, what are you hoping to see?
Well, based on the South African experience, and so long as the the Nigerian government stabilizes the economy at lower inflation rates, keeps the economy growing at these 7 or 8% a year and 5% per capita rates, so long as it manages the fiscal deficit, and so long as it encourages more actors to come in the bond market by providing alternative instruments and by developing the demand for those instruments, like South Africa did, that is having more institutional investors demanding corporate bonds. I think in 7 to 8, 10 years you can achieve a similar level as the South African corporate bond market, which, by the way, is not really well developed yet. It's relatively more developed than Nigeria or other sub-Saharan countries, but it still has a way to go.
Okay, now finally, before I let you go,
sure.
On the Eurobond issue, we've done 2, 3, okay, there's one diaspora bond that Nigeria is also looking to. Other African countries are also looking to that. I mean, there's this call for African countries to, more than ever, develop their infrastructure, because that's when,
yes.
We can be that good frontier market, as we're often being called, that's the African continent. Do you see more African countries towing this part, going out into the international market, showcasing their economies and trying to raise international?
Well, probably we are experiencing a momentum time in the world where there is plentiful liquidity, very low interest rates, and the risk appetite keeps robust. So I think a few more countries may be able to do that. I mean, to go international in the Eurobond market, but not many. I think they are not ready to issue Eurobonds because they don't have the required features or the requirements indeed make for a country to be able to issue Eurobonds. So I don't expect many sub-Saharan African countries to own the Eurobond market. Let me tell you that you had an initiative by Standard & Poor's and the United Nations Development Program in 2004-2005 to help countries get a rating in order to issue foreign currency bonds, like Côte d'Ivoire, for example, or Senegal. Well, after that, these countries barely issued any bonds. So you have to go back and look at the history. I don't see many more countries than Nigeria, South Africa, Botswana, Namibia, and probably a couple more countries in Western Africa issuing Eurobonds, except for more issues in the South. But I don't see, even with this risk appetite in the world, I don't see many more coming in and issuing.